This is good for small financial institutions, good for small business, and good for families across America.
Supporters must think we're really stupid. This bill is about giving big banks yet another chance to crash our economy.
Dodd-Frank has proved to be far too blunt an instrument. For one thing, it's imposed a crushing regulatory burden on small community banks and credit unions.
Since when is a bank with between $50 billion and $250 billion in assets tiny and harmless?
Our legislation is going to improve the overall regulatory environment. At the same time, it's going to make improvements for consumers.
Experts at the Congressional Budget Office say that this bill actually increases the likelihood that a systemically important financial institution will fail and that another financial crisis will occur. I spent 5 years researching the causes of the 2008 global financial crisis. Without question, one of the key causes of the crisis was deregulation. As a Financial Crisis Inquiry Commission report that came out in 2010 concluded, deregulation and reliance on self-regulation by financial institutions has stripped away key safeguards which would have helped us avoid catastrophe. Supporters will tell you that the Bank Lobbyist Act is really just about giving relief to small community banks and credit unions.
We've gotten to the point where arguably small banks are now too small to succeed.
But the truth is, community banks are doing very, very well. According to the FDIC report from the third quarter of 2017, 96% of our nation's community banks are profitable. This is up from about 70% back in 2009. This bill lifts sensible limits on two of the largest banking institutions in the country, Bank of New York Mellon and State Street. It also removes the automatic oversight by the Fed on 25 of the top 38 banks. Dodd-Frank sensibly requires lenders to first determine that loan applicants are able to repay before making them home mortgages. Lenders who fail to make this assessment can be liable to borrowers. This Bank Lobbyist Act would allow banks with total assets up to $10 billion to actually make unaffordable mortgages with no liability to borrowers, so long as the banks hold these loans on their books. If the bill becomes law, Congress will excuse over 97% of U.S. banks from having to verify applicants' income, assets, and debts for mortgages that they keep on their books. Is there anything good about this bill? There's a provision that will require credit reporting agencies like Equifax to let consumers put a freeze on our credit reports without a charge. Yet right now, in states that allow fees, the fees are only about $2 to $10. Is a savings of $10 really worth inviting another financial meltdown? Is it really worth exempting 85% of the mortgage market from fair lending laws? Is it really worth excusing over 97% of U.S. banks from having to verify applicants' income, assets, and debts for mortgages that they keep on their books? The answer is no.